Good morning, traders. Thanks for joining me. It is 8:04 a.m. Chicago time on Tuesday, the 3rd of October, 2023. This is episode number 2549. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A reminder that these discussions are for just discussing the market for educational purposes only. These are not recommendations to trade. I have some issues with my data. This is the reason that I'm late this morning. You could see that IQ feed is running behind. So getting that resolved. So this sheet's a little bit off. This is crude oil, gold, silver, and copper. The data here is delayed by about 10 minutes according to my chart here, pretty much across the board. This is only for this pre-market summary sheet. It's not so for the front end, so just be aware of that. Currently, the market's in a risk-off condition. We have very, very symmetrical structure as we did yesterday from the overnight session on Sunday night when the market opened up high and consolidated up there and then just started to run lower. This morning, the RBA keeps rates unchanged as expected. Swiss inflation lower than expected. That takes the pressure off the S&B. Fed's Mester, one more rate hike likely needed this year. Fed's Bostic, Fed in restrictive territory, and that is helping inflation fall. Still has some ways to go to get inflation back on target. If you recall, the Speaker of the House, Kevin McCarthy, passed a bill that's going to Congress to extend the government budget through November, middle of November, and that was against some influential players in the party, the hard right players in there. One of those is Representative Matt Gaetz. And in retaliation, Representative Matt Gaetz is looking to oust the speaker who came into the seat in a very, very difficult way, and is relatively weak in terms of political positioning. So we'll see how much influence these guys have over him. But this is kind of playing out, and it's likely to get we're kicking the mess down to November. We'll see how that works out. WeWork decided to withhold 95 million interest payments to bondholders due Monday. That's not a good sign. WeWork, of course, struggling with all this commercial office space and people not wanting to go back to their offices. 10 o'clock today, U.S. job jolts job number. This is a significant number for the Fed, expecting 8.8 million. The prior is 8.827 million. It's been cooling. I think it's been as high as 11.2 million or so, and it's down. The last month it was down at 8.82 million. So it's come down quite a bit, taking pressure away from the employment numbers. We still do have non-farm payrolls this Friday. Also, at the same time, at 10 o'clock, we get IBD tip economic optimism for October. And then we wrap up the session with API crude oil stock change after the close. And then there are a few other numbers you can, of course, just follow along on your own calendar. But the S&P, basically a double distribution or multi-distribution auction this morning. Pretty active price discovery, 43% more volume on the short side than the long side. So the inventory is short by 43% more than the long. And then we have a range of 43.25 points, quite wide again. Again, very, very similar to Sunday night. The point of control is shifted down from yesterday's 43.50 to 43.23. The market's accepting these lower prices. So let's move on to what we expected yesterday. Here's what I was looking for yesterday. I was looking for the primary scenario that I discussed is that there is no primary scenario. The condition is that we are opening on top of the 43.15 high volume node. There's a secondary high volume node just behind it at 43.25. And so with those two, with that being the case, and the way the overnight session had played out, where it gapped open higher, went all the way up to 43.55, put in a point of control up here, and then ended up falling and starting to trade at 43.15 on top of the MC point of control. So this set us out to have a pretty kind of coin toss condition to open in. My primary scenarios were to test lower, to test down, take out the prior day's low by a small margin, and an impulse up and push to 38.35. 38.35. That's one of the scenarios. The secondary scenario is we squeeze back to 43.25, the prior settlement, and then we push to 92. Well, what did it do? What did it do? It did all of the above. So yesterday, as we scroll back here, we look at what it did. It opened, it pushed lower by just a bit, and then it ended up taking out the prior LOD right over here. So we put in our initial balance right there. We had a very decently well-defined low, very well-defined IB high, and then we poke the IB low. So we have range extension down. We poke through the low of day. So this entire segment for about the first hour and 15 minutes is what I covered in two squiggles on that scenario, and then we ultimately ended up, taking out the low, turning around, getting an impulse right here, and then pushing into the high yesterday of 43. I think the high was 43.38, right? 43.38 is what we went to. 43.38. So that's right where it was expected. 43.38, 35, expecting the market to stall up there. So we ended up pushing to 43.38, and then it just exploded to the downside. There was a lot of news chatter yesterday. Exploded to the downside. So we had a neutral day. So now we had a neutral day. We broke the IB high after breaking the IB low, and then comes back into the open mid and VWAP, tries to extend further. We missed the low on the retest by a couple ticks, and then just walked itself to where? It walked itself to the prior settlement. Exactly the prior settlement again. So what this market told us yesterday is that neither side had any power to change conditions. So when we look at the TPO chart, we see that we ended up squeezing lower. So remember the 92 that I designated to the downside. So what this market actually did is it just played both scenarios. It played the scenario to 38, and it played the scenario into 95. I think the low is 95, and 92 was our target, right? So on this image here, you could see the 92 designated here, the 38 designated up there, and it just went to 95. This morning we went to 92.25, so we kind of tagged that key retest area. But it's important to note that it ended up settling and closing right where it did on Friday. So both sides had a pretty decent fight, and then ultimately ended up in the same place. So you could see it here, close right on top of each other, and we ended up filling in a little bit more of this high volume node on this profile. The point of control remains at 15 15, and this other area right up here that's likely to shift the point of control is 27-ish. 27-ish is like 26.75, 26.50, something like that. So yesterday, lower high. There was no real value on Friday. It was pretty much a trend day down. Look at how small the IB is versus the range. Yesterday was neutral, normal, with an extension down. This morning, it's opening on the extreme of that low. And if you recall last week, last Thursday, I talked about how we created this excess low. If you recall that discussion from Thursday morning, I said, Wednesday put in an excess low. This is a very strong indication that buyers are stepping in and sellers are petering out below this 92 area. And so it's important now to see if those buyers come back in and bring us back towards the 43.15 again, or if they give it up and give up the excess, and now we're going back to test 42.77 and then moving down into 42.50, and then ultimately again, that key price in this area, 42.30, is the balance price underneath. So that's what's shaken. If we do retest yesterday's low and pop higher into 15, expecting consolidation, expecting it to attempt to push higher into the close, but not looking for it to exceed the prior day's high. So what we have here is an impulse pullback and very strong potential now for a continuation, and the number that we're likely to continue to is 42.13. Again, not a trade recommendation, but that's what things are shaping up to be, in my opinion. So that's what we've got. The NASDAQ looks quite different, though. Look at this. The NASDAQ inside day yesterday, NASDAQ has remarkably more strength. Yesterday. The NASDAQ ended up extending the IB high quite a bit. And now the NQ's got this 14,800 area underneath it that's still kind of weak and untested, and we're opening at the low end of the range. So the NQ, if the NQ tests the prior day's low and finds buyers, then we're expecting at yesterday's point of control right in here in the 915, 912 area right here. So 915. Okay, but look at where the NASDAQ closed, right up at the upper end of the range versus the prior session. It's settled much higher. The NQ showing a lot more strength on these retests. So I'm not sure if that's enough to hold the ES in check and keep it from getting into the excess from last Wednesday. But most likely the NQ will give up this one-time framing up that it has. It's been in a one-time framing up environment. Again, radically different than the ES, even though these two products generally have a very close correlation historically. This looks like it's very likely to give up. So this, if it doesn't find buyers as soon as it pokes through yesterday's low in the NQ, then it's a lot of trouble for longs, and they're very, very likely to give it up. The point of control in the NQ right there in the 14,890 area. The MC point of control is above us. Yesterday we did finish above the MC point of control. Looked kind of bullish actually yesterday, as it tested down and finished at the upper end of the initial balance. But this morning it's gotten to the other side, and this is completely valid value, by the way. This value area is completely valid, very balanced profile yesterday, and it's on the other side of it. So there's, in my opinion, there's a lot more resistance, and there is support here. So I'm expecting the NQ to open, test up, make a really valiant attempt, and then start to clean up these weak structures. Again, the single prints a lot of this thin structure from last week and make its way down into that 14,700 area, 14,670 area right down here. So 670 is where I'm expecting it to kind of find its next test. What's important here to watch is, does it clear this 800? You know, if it gets into the 800 and breaks through, and then on a retest it tries above the 800 and then starts to take out that low, this to me is a strong indication that this product's weak and it's likely to continue lower, right? So I'll leave you with that. Crude, beautiful failure on crude. Remember, I talked about, you know, it broke higher. This was a surprise to me when it was consolidating here. It had a megaphone forming. It looked like it was exhausted. It was trading this middle balance area, and it broke higher and went all the way through 94. And then crude opened the following day up top and ended up going down almost into our 91.25, and then the day after that it opens in value right at the point of control here and just immediately rejects it back solidly into balance, bringing us back to the 90 area. The 90 area, 90.50 being the MC point of control for this area. This is the area I expected it to be attracted to if it was to fall. And you could see the low there went to 90.35. And then the following day it opens just above 90, retests to try to get out of the range. Again, 91.25 being the over under. It went to 91.22 and then rolled over and finished right at the low yesterday, bringing us back into the 88 handle. So now remember, 87.50 is the most important test now once we've cleared this area. So what we've done is we've tested and retested balance, and we're out of balance this morning. It opened, tested down, and is responsive up into 89.50. So as long as it stays below the 90.50 here, crude is much more likely to slide down into 87.50 than to go back up to 94. That's how it's shaping up currently. Okay, good luck today. I'll catch you tomorrow morning. Take care.